Hello, and thank you for joining us as we take a closer look into the precious metal market alongside leading industry insiders. Today we have ex-Wall Street trader and silver bug Chris Marcus of Arcadia Economics, giving us the insight into how 2020 has rocked American investing. Thank you for coming on, Chris. For those that may not be familiar with your financial background or your YouTube channel, Arcadia Economics, would you just like to give yourself a brief introduction?
Hi, well, I appreciate you having me on here. It's fun to talk silver. I run Arcadia Economics website, YouTube channel, where we dig into the most fascinating thing I ever could have imagined would happen in my career, which was getting into silver in 2009. Starting to learn about how the market is manipulated. Left a job on a trading floor because I thought this was beyond wild what was happening. I think a lot of what I've studied is unfolding now, where you have an interesting dynamic in the gold and silver markets. So a lot of fun stuff going on. It'll be fun to dig into it today.
Brilliant. And, given your background on Wall Street and the banking sector, that obviously afforded you an incredible insight that not a lot of us can have into the market. But what I found interesting is that you've gravitated heavily towards silver. Why is that over the other precious metals?
Well, like I think a lot of people, I got into gold first, which was the entrance into, they're printing a lot of money, which I had heard, but they don't really talk about that thing on Wall Street or in business school. And when the subprime bubble collapsed, started reading and listening to Peter Schiff, saw how he had written a book in 2006, laying this out to the detail. So gold quickly made sense. And then if you're of the school of thought that central banks are just going to print a lot of money endlessly, if you see a gold rally coming, you have silver there, which is a smaller market. A lot of people call it gold on steroids. On the moves up, you generally will expect a much higher rate of return. On the moves down, silver gets pummeled more, so keep that in mind as well. Although, especially really studying the debt, then getting into Austrian economics, which lays out why these things happen when you distort the interest rates and what has happened time and time again throughout history. Then add on that to keep the prices of the metals low, the banks have come up with this, maybe not new trick anymore, but it's traded in paper. So no matter how much of a bid there is, sold, 10,000 contracts, sold, 100,000 contracts, and has created a situation where there is an incredible amount of leverage in these markets. And I don't know, I just think if silver hit $50 in 2011 and we have exponentially more debt since then, and wait a second, if silver hit $50 back in 1980, and I mean, gee, you look at how fast they're tacking on the debt and QE packages, and so it's an interesting market because it kind of sleeps for long periods of time, sometimes decades. So there's not a lot of people that want to sit around and wait that long. Although from my experience in markets, if there's an energy to a market, then you see somewhere it's out of balance. If we live in a culture where no one has patience beyond 10 seconds, then if you're able to be patient, invest for the long term, I think there's some incredible opportunities out there right
now. No, of course. And, it really is an exciting time. Last year, you put out The Big Silver Short, a fantastic read. It's now available in audio book, I believe, as well. And in there, you touch on the financial crisis of 2008. And, you can, of course, draw from your past expertise as well. Are you able to draw any parallels between that kind of period of time and the current investing climate produced by COVID, i.e. kind of the massive change in investment demand we've seen and the kind of logistical shortfalls of silver?
I sure can, and because some of it is so wild, you might think I'm making it up, and I could understand that. Fortunately, you don't have to take my opinion for anything I'm saying here. This is all just connecting some facts. But it's interesting what's happened now relative to 2008, because one of the things that the book discussed stems from this interview I did with Bart Chilton, who was one of the CFTC commissioners during the time of their investigation into silver manipulation. When the agency said they found nothing, Bart, in the interview, clearly disputed that. The Department of Justice, which has now used the RICO statute, which is generally reserved for organized crime or mafia cases, which perhaps maybe is fitting in JP Morgan if you really look through any of the documentation of some of the long series of felonies that they've been involved in. In that interview with Bart, he confirms that Bear Stearns had a large position. JP Morgan took it over. It was so large that it was beyond the position limits. He gave them a temporary waiver to reduce it. And it's interesting that he says they came back a couple months later, and contrary to that, they had made it larger. But what most people don't connect is that this is the period, remember when gold went from 1,000 to 700, silver went from 21 to 9 in 2008. Everybody says that was panic selling. Well, with all due respect, I would dispute that, because you had silver at $13 6 months earlier before Bear Stearns collapsed. This was September 2007. Mortgages were already collapsing. Fed starts cutting interest rates. You know, you see and I remember being on the trading floor. That was my first year trading my own book. And I mean, it was insanity. That began long before Lehman. So you have interest rate cuts, financial instability, silver rallies from $13 to $21. Now, it just so happens that it starts plummeting the day after the Bear Stearns JP Morgan deal, where Bart confirms that JP Morgan was making their position bigger. So you have silver in the middle of historic interest rate cuts, the world melting down, and between the Bear deal and when Lehman collapses, and a little bit past that, silver drops from $21 to $9. Now, I have a relationship with Miles Franklin, and in one of the chapters of the book, we talked with Andy Schechtman, who's the owner of it. And he mentions how while the price fell by more than 50%, which would normally indicate supply is just everywhere, right? U.S. mint shut down, Canadian mint shut down. He could not get product anywhere throughout Europe, throughout the world. And then when you connect that JP Morgan was making their position bigger, you know, so I think a lot of people made an intelligent decision following QE2 to buy metals. I think they made a very well thought out and wise trade. I don't think they just were wrong. They were cheated. And we have the evidence that they were cheated. Bart Chilton told it. Department of Justice, while they allow the spoofing to continue, we had a nice spoof this morning done, you know. So, I mean, you know, you have to wait a little bit, and some people do or don't like that, and that's okay. But when you look at what's happening, to me, it's as certain as what was building prior to the housing bubble, and it was going to go when it did. And similar, this situation, although in the inverse manner to the upside with silver, is going to go when it does. And I think it will be quite spectacular when that happens.
You know, of course, and is that preparation for the eventuality that, you know, no one wants to happen, but, you know, of course, there's only so much wealth you can preserve in light of these. And, you know, of course, with your history and all of the expertise you've called upon for the big silver short, did you kind of draw on anything that would go unnoticed by the casual investor, or perhaps more in line with recent events, panic buyers? Kind of what's the biggest or largest misconception surrounding silver as an investment that you come across?
Well, maybe that it's generally completely ignored by most investors. In fact, I've been talking to folks who run silver mining companies, and some of them get the book and they're like, wow, I thought silver was a good deal, but oh my God, I had no idea this is what was happening. I mean, the reason I named it big silver short is, to me, very similar to the environment you had, again, with the mortgages and as portrayed in the Big Short, where in the beginning they say it was there for anyone who chose to look. And there, I would say, are many reasons why people are not incentivized to look or discouraged to look or told they're stupid if they ask questions. I thought the movie did a great job of pointing that out, how people can get this. I mean, but usually where it gets blocked is they say, gee, that's weird. The debt's going exponential, Fed printing unlimited, and now they need to do something aggressive relative to that. That's kind of bizarre, but they feel like, well, I ask, and then some JP Morgan nitwit tells me I'm a dumbass for not understanding it, where, you had all these terms like CLOs and CDOs and mortgage-backed this and that. I mean, they were selling crappy loans, mixing and matching it in a 3-card Monte to leave people intimidated and feeling powerless. And really the purpose of the book was to say, all right, so anyone who really wants to know what's going on, that perhaps what I did was try and condense it into one unit. So if you're starting from zero and want it laid out in a clear format, that's why I did it through interviews, whereas it wasn't just me writing, but I thought, what if it actually kind of came out in a sense as the investigation I would have thought the Department of Justice or CFTC should have done, where all these people who've been seeing it, trading it, providing documentation, providing evidence. There's Andrew Maguire, who's well known in London metals throughout the globe in the gold and silver scene. He talks about telling the Department of Justice in 2011 that these markets were rigged, and they looked back at him and said, well, what about the economic fallout? Most people have not heard that. They don't talk about that on Wall Street Journal or CNBC for reasons that we all get. And so rather than whining about them, it was almost set out to disprove it. I was walking around Wall Street, I'm like, there's no way I could be getting this, that everybody around me is missing it. And it was, but it's there. And really maybe the mental part and handling when you doubt yourself and those emotions that, from everything that I've experienced and now talking with investors around the world, really it's really how we handle our emotions, what distinguishes anything in life, right? And this, I think, is the same.
No, and it's kind of putting that information in a clear and concise manner that allows the everyday kind of investor or someone who's new to the field to appreciate it and kind of protect themselves from the depreciation of traditional currency. And, I think something that I found interesting is that, we know that the majority of silver is sourced from non-silver mines. And kind of given the COVID environment at the moment, they could be struggling to reopen once this all kind of dies down. And, we've already experienced a surge in silver demand, which has highlighted the logistical issues and kind of not necessarily a lack of supply, but a large delay in the metals delivery. And, we're now starting to hear kind of imminent kind of looming warnings of a second wave of infections. Should investors be preparing for further disruption for their supply of bullion?
Well, we've seen, I have mixed thoughts on the headlines. I wonder if the headlines about Corona have anything to do with the reality of Corona. And I'm not saying I know, I'm just saying that we have the same president who said during the campaign, stock market's a big fat bubble used by the Democrats and supported by the Federal Reserve. Now he calls for negative interest rates and QE. So, okay, when this guy gives me the Corona information, I don't know how to interpret that. So I'll leave that for people to make their own conclusions. But at least if it does happen, well, if there is a second wave, and there's certainly a lot of headlines indicating that, we saw what happened during the first wave. Silver sales surged. I'd say it's settled down a little bit since then, but gee, would you think that maybe that might happen again? I also wonder, and something that if there was one single takeaway or thing for people to keep an eye on, we've just saw record gold deliveries at the COMEX. And silver deliveries start about a week from now. And if whoever thought they wanted to take a historic amount of metal from the gold market, if them or someone else has a similar predilection towards silver, like you said, you pointed out how the mine supply is down. I mean, I read article after article sorting data. I mean, you see around the globe, Keith Neumeyer, First Majestic, one of the largest silver companies, is talking about withholding production because fortunately he has stood up and spoken out about how these markets are clearly manipulated and he doesn't want to sell his metal below price. I've talked with other mining executives who are, as they're becoming educated about it, are saying the same thing. It's interesting. I don't know if you've been looking at the amount of metal they are reportedly adding into the SLV and Silver Trust. I mean, it's beyond stunning. So you have supply down, demand by every metric possible skyrocketing. Again, Andrew McGuire, last time we talked, he was telling me how in wholesale bars, basically all the refiners have switched over to meet gold demand. He thought he was going to get his bars in July. Now they don't know when. So where does this lead? I mean, at some point you're headed towards a short squeeze. Do we see it this summer? Possibly. Do we see it this year? Possibly. I look at things in terms of probability. I guess you only know 100% after it's happened, but a lot of the signs similar to what we saw with the London gold pool are happening now.
And I think it's interesting kind of how the demand has shaped kind of everything to do with COVID, because it's not been an easy time for the industry at all. And, when you look at the significant price difference between the futures market, paper and physical gold, you look at HSBC losing $200 million in a single day, I believe it was. Given the promising outlook for silver that's been predicted for the rest of 2020, with kind of a lot of industries now emerging from the COVID lockdown that can kind of apply the more practical uses of the metal, are we going to see a sharper rebound from silver than we are of gold?
Well, I'm pulling up and it looks like since we've been recording, silver just got spoofed again there, a double spoof, we could call it. Let's see what we have on the gold price here, because still 1765 I'm seeing, which keep in mind is really only the second time in history that's happened, the way up and down in 2011, so if you want to count that as one. So if gold hits 1800 and then gold hits, which I don't know, maybe if the Fed was even pretending to tighten interest rates might be a little different, but again, Jerome Powell showed no signs of letting up. So you'd think, I don't know why people would be selling their gold now. And now you have second wave of Corona, and you have American investors that like momentum, buying high, selling low, and chasing after the price has already moved. And then what happens when gold crosses through 1900 and then goes past that, hits new all-time high, and then goes through 2000, and you're already seeing banks get blown out? Keep in mind, here's another good thing if people want to look up. You mentioned the March 23rd and March 24th. Look at the price of gold on those 2 days. March 23rd was the day the Fed went to unlimited QE, 8 days after doing QE on the Ides of March, which I find amusing. So they go to unlimited QE, and HSBC gets bopped with their exchange for physicals. CIBC also lost a big chunk. I'd bet an ounce of silver that there's more losses associated with that situation. If that happened then, now gold's back above those levels. What happens to silver when gold crosses through 2000? That's what I will be quite excited to see.
No, and of course, and I know you briefly mentioned there the exchange to physical, and I know we've been seeing kind of records amount come out of COMEX for that. I believe it was 4 million tons for 2019. I could have that slightly out. But I think, bearing in mind the loss they just took on the paper market, how are the major banks going to adjust their physical holdings of silver given this impending price rally? Do you think that that's going to play into their hands? Are they going to adapt differently to this post-COVID world?
Well, it's interesting because for years I've wondered at some point if you're short, if you have this short position, would you try and get out of that one? I mean, it seems like my best guess is, and having some experience being around bankers, fortunately I never worked as a banker. I made it to the trading floor, which was a little better. My best guess is the mentality is like, well, we know this thing's going to blow, but if I do this and make a profit to next year's bonus, then hopefully it blows on someone else's watch. Now, we've seen signs, what it was, Bank of Nova Scotia pulled out. I hear things about SocGen, let's call that unconfirmed, but again, CIBC, HSBC, I mean, they're getting clobbered, and whoever is holding a short position there, I mean, and then again to see, there was that other story about how they're pulling back from the COMEX. It seems like they're running for the exits. I would be. I mean, when it's clear that any amount of money is going to be printed, firing off trillion-dollar stimulus packages, mailing out checks. I mean, I don't know. Maybe you got to wait for like Bernanke to actually get in his helicopter, like flying around with confetti dollars. In fact, we were joking about it, I think, before we hit the record button. Maybe the sign that the thing is finally about to pop. The Fed's buying ETFs. How come they're not buying GLD and SLV? Why aren't those important? I wonder how that gets decided. But, I mean, if somebody else knows how else that can play out, I mean, it's all there. And I think the warning signs are being given now. I appreciate there are folks like you that are sharing this information, and and I get it. Some people don't want to hear it, and that's fine. But it's for the people that were intrigued by The Big Short and say, "Gee, well, that would have been cool if I had been able to do that." And I'm not saying to go speculate wildly, but geez, if you have money you want to save, gold or silver sure seem better to me than negative. By the way, when people talk about, are we going to go to negative yields in the U.S., if we have a sub 1% yield and the Fed has a 2% inflation mandate, we can all pretend we don't notice, but it's already negative. Of course, inflation is far more than 2%. So, I'd suggest to people, follow what feels right to you. Don't ever let Ben Bernanke or these guys, all of whom said subprime was contained and couldn't see it. So don't listen to me or anybody else on YouTube. Just feel what feels right in your gut, make decisions based off that. And I think that'll serve you pretty darn well.
No, that's definitely the most sound advice I've heard. You can't act on impulse when you are too unaware of the goings on. And, we have these figures of authority not being clear enough and kind of distorting the knowledge base that is so essential to make these decisions. And I think we saw some very interesting kind of buying and investor trends at the beginning of March. We have the secondary market here in the UK, as we mentioned. It's definitely been very buoyant throughout this crisis. And, we had a sell-in surge as the prices recovered from the lows of March. And, we're on the edge. So many people have been furloughed. We've got unemployment at an all-time high. I know that resonates with the US crowd as well. The public purse is tighten, and, the government handouts are going to be coming to an end pretty soon. Do you think that we're going to see more of a hoarding or more selling from the public?
It's an interesting question, because as much as we talk about gold and silver as money, most gold and silver owners, myself included, we're complete hoarders, and I mean, and I think that's because when people are holding metals and looking at what's happening in the world, they're like, gee, this guy's just getting started with his printing press. I mean, I might want to hold on to these. So, I think there will be a mix. I don't think most gold and silver owners are going to sell anywhere near these levels. You might have people selling paper, but I don't know, the orders that I get, I haven't Since I started taking orders from Miles Franklin, I think I had one woman who wanted to sell, although there were other, legal complication and trust things. But I mean, I don't know anyone who's been sitting there saying, silver hit $18 today, at least before it was spoofed. I gotta take a couple thousand ounces. This just seems like it's headed lower. I think you get people who get frustrated by the weight, and perhaps maybe something worth considering is that I get it. And I've been all invested. In fact, I had all my assets in gold and silver while I was starting a business before I had an income coming in. So there's certainly been times where I've been like, I wish it would finally go now. Although if someone is fortunate to have savings and an income coming in, if you can shift that mindset a little bit to, again, make your own decisions about what you think is going to happen to gold and silver. But if you come to the conclusion that, all right, there's no way U.S. is ever going to unprint, there's no way they're ever going to pay off the debt, let alone the other 200 trillion of unfunded liabilities. That's the whole science of trading. If you know something's out of line, well, if you get time, that's what China's doing. They're sitting there saying, all right, really going to drain it, let us take all of your gold and reduce prices. Okay. So, I mean, go watch Putin talk about the dollar. I mean, the guy, it's amazing. The one politician, he doesn't lie. He tells you it's like the dollar is the mechanism of control. We want gold. We're buying gold. In fact, it was interesting when they claimed to stop buying gold a couple months ago. I wonder if that was just propaganda to get people to think, just keep leaving the gold price low. I don't think there's a lot of metal changing hands right now. I don't know that we'll go back to using gold and silver as money, maybe in some forms, more as an exchange of value. Maybe some of the gold and silver-backed cryptos, I think the ones that are legitimate, they will be a part of what we're using going forward. But I think what's going to be tough for whoever is short silver is that if there really is a run on the bank, which there's signs that is kind of happening now, I don't think it's going to be like gold and silver go up a little more and then because most of the gold and silver at this point is held by people that sound like you and me.
No, of course. And I think it's interesting that you mentioned China and Russia there, because, of course, they're well positioned it's speculated that they are well positioned for a price surge in either silver or gold. And, they've both been exploring ways to accelerate the process of de-dollarization and the dependency on the dollar. But I think it would be interesting to know if these countries are too dependent economically on exports of the precious metal to really truly break away from the dollar and to use it as that political leverage. I know we've seen China produce their new cryptocurrency, and Russia is definitely exploring blockchain, but it's kind of whether they have these holdings in the precious metal world and can they fully utilize that, or is it kind of almost a faux power play?
Well, did you know that China has been aware that the U.S. has been rigging the precious metals markets? We have confirmation going back to at least 2009, and that Russia has been aware of the same information since at least 2004. If your listeners aren't familiar, there's a great, truly, in my opinion, patriotic institution here in the U.S. called GATA, the Gold Antitrust Action Committee, with Bill Murphy and Chris Powell. I believe, if I'm getting the story correct, they had a conference in 2004, and there were Russian officials there asking them, wait, what did you just say is happening there? They're selling gold and silver they don't have, and so I wondered before if China, if I was able to figure out in 2009 that the U.S. economy was a Ponzi scheme, which is not requiring any advanced arithmetic there, I don't know, you'd think somebody in China or Russian central bank or government could piece that together. And if that's the case, let's just say China said, all right, well, this U.S. thing isn't looking so good. Maybe we don't want to crash the market, but how can we diversify any risk away? maybe they sell some treasuries, develop a petro yuan, buy a lot of gold, buy a lot of gold companies, import every ounce of gold that, it's almost like you look at their actions, they're like, gee, I guess maybe they are preparing for life after this. As you see, that's the other thing. On top of everything else, add in that the world is telling you they're tired of seeing American politicians and warmongers push other people around and then, try and control them with this. Geez, talk about it. You give someone the reserve currency status, and then, would it be possible to more thoroughly abuse the trust that you've been handed? And, but I think people are noticing that it sure seems like something's coming close to a head, but, we'll see. And I would say, again, for folks that are getting into the metals, hey, maybe it'll happen sooner, next month, or there'll be something with the deliveries. It's possible, but if there's ever a market to avoid margin, to avoid needing anything to happen by any certain time, learn from the Hunt brothers. They probably would have been fine if they hadn't had the margin. So just do things in a way that, feels right. If it's keeping you up at night, you're trading too big, and it can be a great opportunity, but just start with a good mindset. And I think it'll help a lot of people out in the end. That's what I'm looking to anyways.
No, and of course, that's what all of this is about, giving that wealth of information in a way that's easily digestible, concise, and at the end of it, actionable. But I do find it interesting. I know we've lightly touched on it before, the papers market. If you'll excuse me, the papers market, because on the 18th of June, Kitco News reported that silver is in a fantastic position to rally thanks to, of course, the industrial demand. And silver futures have been showing a 24% increase on the previous month for July. Kind of, what do you see the forecast for silver to be across the remainder of 2020?
Well, I'm an options trader, so I'll put this in probability, maybe a little different than the standard answer. My guess is silver will probably sit somewhere between 15 to 20 bucks until it breaks. And I know some people see a gradual move up in the price, and certainly that's possible, although from my studies and experience in trading markets, when you put enough leverage, there's a reason the mortgage market didn't slowly decline in 2008. You set certain dynamics up, you get certain results. So I think it's been set up so that until you get that break point, enough people say, I want my metal, one day you're going to have the situation where someone shows up and says, I want it, and there's a failure to deliver because it's just not there. Again, that was what the book was about. Like, is there any, I bring investor after investor from around the globe onto my show regularly. And I'm like, is there any other way that you see this ending? And I think the trick is that sometimes people say, well, it's definitely going to happen by this date or by that date. And, I think that's really what we're pricing, expect the CME to raise margins, or expect everything to keep the charade going will be done. So, it's like, who would have guessed 20 years ago that we'd be doing unlimited QE? There are like certain things that just weren't in the playbook. So, but it's like you put certain things in motion and you're going to get a certain outcome. And if there's some other way this ends, and again, keep in mind, this has happened throughout history over and over again. For anyone who's not familiar with the London gold pool, that's a great reference point, because that's what led to Nixon taking us off the gold standard, because they were printing all the money, and you had same thing happening then. I think it's actually an incredible parallel for what will happen or could be happening right now, and it'll be fascinating. Even if you're not investing, I think it's going to be a fascinating story and saga to watch this unfold, and hopefully with something better on the other side of that, with some honest markets. Geez, if the banks are eating 99% of the dollar through inflation, maybe rather than the idea of like, oh, we're all screwed without the dollar. I mean, that's like saying you're screwed without the mafia shaking you down for 90% of your salary. I'm not saying there won't be adjustments, but I feel, at least to me, the more people who understand the truth, and I think most people have a good intention, want to lead a nice life. And if you fit into that category, I think there is some, maybe it'll be our kids or grandchildren, but I think that's perhaps what we actually have some ability to impact and affect right now, which to me is pretty exciting.
No, of course, and I think that's kind of been the common theme across a lot of the people I've seen and kind of referenced as there is a shift of ideals where everyone is kind of embracing the common idea that the dollar is on the way out, and you know, I'm not going to put a date to it, but you know, it's scary times, and you know, no one could have predicted this level of disruption in 2020. And you know, if ever the market was going to come to a precipice of a decision point to go in either direction, it's this year. But you know, to move on to a lighter topic, you know, just to kind of round things off and leave on a happy note, kind of what is your go-to silver product? You know, of course, you're a silver bug. There's no hiding that at this point. Do you have a go-to bar, a go-to mint, a favorite design?
Well, in terms of, if you look at the whole spectrum, my favorite is probably something I shouldn't mention. Again, I'm a former option trader, and kind of what started all of this. I had a big option position on in 2011, which went better on the way up than the way down. Although that experience was what made me fascinated to see what was going on. So I have a love for First Majestic out of the money call options, which again is a very different level of risk from Bullion. But certainly some of the mining stocks are great. In terms of physical bullion, though, wow, I had this. It's funny. I see in the upward vision of my office a picture of these silver bars right now, and is reminding me. At one point, I did have a 1,000-ounce silver bar, which was kind of cool in one sense. Not the most practical thing. On the other hand, I actually like the junk silver, which, depending, you know, it's going to be different for each person. Maybe if you're buying $200,000 of silver, you don't want just like bags of quarters and everywhere. But you know, if you're in a community and you think you're going to be bartering, or you know, one day we'll be saying, "Hey, I need my bread and eggs," you know, you might be a little tough if you have 100-ounce bar. You know, you're like chipping a little piece of it off. So I like the junk silver. Actually, here's one of my favorites, which I won the First Majestic 10-ounce silver coin. I won at the Vancouver Resources Investment Conference. So that's a special one. And oh, here's another good one. The Lyndon Baines Johnson killer coin. I hear he wasn't the nicest fella out there, and somehow he made it. I think this one's 3 or 5 ounces. So those are a couple favorites. We're also in the process of minting figurines, 1-ounce silver figurines of Ben Bernanke working a printing press. Assuming that won't land me in jail. I'm going to get a little more lawyer verification on that. But part of it, like anything in life, I think is important to have fun with it. And for people, if you're enjoying studying these things, I think it can be a lot of fun. If you find silver, gold, or any investment just completely boring and it makes your eyes glaze over, then probably not the thing for you to invest in. But I think there's this growing interest because people can see the truth. Then they match some of the history, which is truly fascinating. And I never expected to find something like, I mean, I mean, but that's the world that is, and we just take that, make the best decisions possible. And, but anyway, a couple of silver stories and I get off track there, but there you go.
No, they were some fantastic pieces, and I think that's what's brilliant about precious metal. Not necessarily bullion, but kind of the diverse ways that you can invest in it. And you know, we've seen some fantastic designs over the years. And you know, you have the more numismatically inclined collectors, and even for them who perhaps wouldn't identify as investors, sorry, they do still preserve that wealth, and you know, they can be appreciated from so many different perspectives.
Yeah, and that numismatic market, an interesting one. I know at least of last year, the premiums on the numismatics were really low. And again, to be clear, don't get into numismatics unless you enjoy going to coin shops, reading the books, learning about it, because really a very separate thing. Although I'm curious to see if we have a real sharp break in silver where even junk silver is hard to find. Gee, I guess you would think that the premiums on some of the real valuable collectible pieces would possibly blow out. Again, that's me just guessing. So, but again, like anything, if you are interested in that part of the market, then you're probably going to have, learning about it. You'll probably have more success, and just, I'd say to folks, just follow what you're interested in, what's fun to read and watch. And that's a good investing rule in general for whatever it may be.
No, of course. I think that's what was the biggest culture shock for me, perhaps, looking into numismatics. There is worlds of information, and you could just be talking about one design on one particular coin from a single year, and it's fantastic that you can again appreciate precious metals from so many perspectives. But I want to thank you, Chris, for coming on. Thank you so much. It's been brilliant talking silver with you.
Well, thank you, Adam. It's a pleasure. I appreciate you having me on the show. It's also just a lot of fun talking with you. And I think people are going to benefit from what you're sharing there. And it's a pleasure. I look forward to continuing this journey with you.
No, thank you. And for anyone who is, again, unfamiliar, Arcadia Economics, do go over there. It's a fantastic resource. Loads of information, fantastic interviews. And again, presented by Chris. Thank you. If you enjoyed this video, be sure to subscribe to the Chards channel and stay up to date with our releases by hitting the notification bell or by following our Facebook, Instagram and Twitter pages.